Right now, there's an incredible amount of uncertainty. When people can't predict where the markets will go, they're unable to confidently invest. And that's what we're seeing right now. Between January and February, there was almost a 30% drop in the number of transactions month over month. The only time, or the last time, that we saw something that pronounced in terms of a reaction to changes in the market was COVID during the pandemic. When we went into lockdown, everyone sort of stopped to assess what's happening and how it's going to affect their family. We're seeing the same thing now. People are so unsure of how this will affect their finances and their cost of living. So everyone's just sort of waiting to see what's happening. And that's what we're seeing in the spring market. It's very quiet. People are unsure. And for that reason, they're just not coming to the table. I'd say the biggest trend, I guess you could call it a trend for lack of a better term, are the tariffs that are coming out of the United States into Canada. And what that is doing is it's adding to the cost of goods in an already inflated environment. So cost of living is already quite high, and we're starting to see unemployment trend higher, which is bringing us to a point where we could be entering a period of what economists refer to as stagflation. So that's when the economy, it's slowing to the point where it's bordering on a recession, where you have people that are unemployed and they're struggling to carry their households, and they're met with these persistent rising inflationary pressures that are driving up the cost of everything around them. It's incredibly difficult for the economy to move through that. So we're very aware that that could become a prolonged situation for Canadians, and it will absolutely affect the real estate market and the investment landscape as a whole as people start to become more conservative with their finances. We're aware that many families are going to be renewing their mortgages. So a number of Canadians financed their properties during COVID when there were incredibly low interest rates, and they're now coming into a totally new environment of higher interest rates where they're going to be renewing those mortgages. So we're going to be also looking at the trends for increased insolvencies and bankruptcies and default rates. We won't be surprised if that starts to trend higher as people feel the tightening pressures of this new economic environment. We're seeing an increased number of condo units coming online. That is relieving some of the pressure for renters because there is just more housing stock available. So it's bringing down the average lease rate on these condo suites, which is nice. It adds to the affordability landscape for those renters. But what it's also doing is it's driving down the actual resale value of those units because there's just more to choose from. A lot of it, unfortunately, is very similar. Values are eroding, and we do expect to see around 30,000, 35,000 new condos being put onto the market, completed by developers in Toronto and the GTA throughout 2025. So that's going to further erode the values. A knock-on effect that will have as well for someone who owns a condo that was looking to trade up for maybe a townhouse or a single-family home, they're going to have a harder time leveraging that investment, getting the money out to reinvest in something larger. They're likely going to be stuck in that condo because it's either not appreciated in value or it's actually lost in value. Another trend that we're aware of, people who purchased pre-construction 3 years ago, that building is now being completed, and as they approach the occupancy date, the actual appraised value is less than it was when they purchased the unit, sometimes by as much as $500,000. So that forces that buyer to then come up with a lump sum cash amount to close that deal. And what we're seeing is an increased instance of individuals who they don't have that cash, so they end up having to forfeit their deposit and walk away from the deal and risk even being sued by the developer. It's an incredibly precarious time, particularly for condo owners, condo investors, as well as just the Canadian economy. We're very aware that we're moving into and moving through a very sensitive period. The interesting part about this is that almost all of it has been manufactured by the current American administration. And we do know that he's quite a mercurial guy. So at any moment, he could just decide, oh, you know what? I'm going to change my mind. And then the tariffs may come off. So we're hopeful that that will happen, but our long range view is that this is going to be another year of volatility, and in the face of volatility, we tend to be incredibly conservative. So we expect to see our clients being just as conservative. We're going to see flat, if not no growth over the year, and we're just going to sort of take it as it comes and adjust as we need to. The cap on insured mortgages has been moved from 1 million to 1.5 million. So what that effectively does is it allows buyers to come into areas that are historically more expensive and purchase homes up to 1.5 million with as little as 5% down. Previously, that cap was set at $1 million, so you could only purchase a home up to $1 million with 5% down. It now unlocks another $500,000 in terms of property value across the city, and gives buyers a little bit more of an opportunity to transact in a higher value environment without having to part with as much of their down payment. So that'll be a good one in terms of giving people more to choose from and empowering buyers to make that decision. I think the other one is the city had relaxed its bylaws on allowing fourplexes across the city.
It is a new era for Toronto housing. Duplexes, triplexes, and fourplexes will now be permitted in all neighborhoods.
So you could very easily go to the city, apply, get your permits, and start construction on a purpose-built 4-unit. They're now in conversation about expanding that to 6 units. So they'll be green lighting rather, the building of 6-unit purpose-built rentals with the same expediency as they have before. So that's just another added bonus for anyone that's looking to move into that purpose-built rental space. And of course, we can help them with that.